Oh, Dan. After our discussion about the market and what people should be doing to watch, I said it only takes 15 minutes a day. This is the current day of the Dow Jones. As you can see, the high here, the market topped out over 26,500, and then it dropped all the way down to about 23,500. So that's a big drop from 26 to 23. That's a 3,000 point drop. You telling me someone cannot see that? Now let's go back in time. Say the market was here at 23. What I do is I have a trend line, and I use a moving average, in this case an 8-day moving average. But as you can see, as the price stays above that 8-day moving average, I stay in, and it continues to stay up. Now, as times go by, I can continue to see we got that big drop there. It was only one day. Usually, I usually wait to get confirmation, maybe 1 or 2 days, and see if it stays below that trend line. So we're already 2 days below that 8-day trend line. Go out more, and then we have about a week's time. 1, 2, 3, 4, 5 days. That's about a week. That's below that trend line. I would begin to get worried there. Some people use another moving average like the 20-day, as long as it stays above that. Okay, after a week's gone by, you got that first pop up, but then it goes back down again. If you'd have gotten out, after maybe 3 days, you wouldn't have lost that much money. And as it went back up again, you've gotten in. So that's what I'm saying. Find some trend line. If it, as long as it stays above that trend line, you stay in the market. If it goes below that trend line for 2 or 3 days, I would get out because you don't know how long that's going to stay under that trend line or if it drops further. But as you see, it was only under that trend line for just under 2 weeks, and then it went back above that 8-day moving average. So I would have gotten out and back in. Again, we see it's staying above that trend line. This is what anybody can do for themselves. You don't need to be an expert. It only takes maybe 15 minutes each day to look at the market, or even just at the close of the day. So that's one day below the trend line. It popped up the next day just barely. You got that big drop off. Now that's where I would have worried. And again, that's where the market topped out in 2000, 26,500. Actually, I saw that day and I waited for confirmation. I waited to the next day. I said if it dropped again, I was going to get out. So the next day, and you had that second red day. Actually, I put in my option trade to short the Dow right at the top there because I said if it didn't pop back up, this market was going to go down further. And where I saw was the next point where it's going to go down was this congestion level. So I told all my coworkers that was a significant area because you see that congestion there. That was going to be a resistance. If it broke through that, the next resistance line would be about here, where that congestion area is. So as you can see, as we advance further, it hit that congestion line and bounced off. Again, that served as resistance. It hit that resistance and bounced off. So again, I didn't think that this was. I determined what if it peaked. If the next peak was less than that, then it was going to go down again. That's where it peaked off, and I put in another order to short the market again. Where I was looking at this to go down to, I wasn't sure. I put in an order to short it, but it went up a few more days, but then came down again. So I made a little money there as well. Actually, I got out here on that, my first trade on that second day there. Actually, let's spread this out a little bit. I made 250% on that spike. I timed that one perfectly. And then, like I said, I got back in on that day. It went up on me. I lost a bit, but I stayed in. It came down, and it played out. And that trade that I got back on there, I stayed in, and actually I got out, which is it Friday. So I made a 250% on this spike down, and I made another 116% this Friday when the market closed. Just having this trend line, someone can easily see once that trend line breaks if the market's going to reverse. Sometimes it may be a small break like this one. It won't lasted about a week and a half, and then the trend line continued up. And this break was even much bigger. That should have signaled people to get out of that market that first day there. And I had already moved out and told my coworkers to move out, protect their TSP funds back here. So those people who listened to me saved a lot. I had some coworkers told me they lost like 4 grand on that day because they didn't get my warning until that day, and they moved, and they lost like up to 4 to 5 grand. I had a couple coworkers tell me. So this is a simple method using a moving average. As long as the price stays above that moving average, you stay in. As when it breaks below that moving average, you get out. I hope that explains the conversation we had. Thanks.